Yo, what is good with y'all boys? Welcome back to another video. This is episode 2 of the KingJayFx Master Bootcamp. Now, as y'all can see on my screen here, I am in a trade. I already hit take profit and I took partials right now, and I'm letting the rest run. Now, what I am doing here and how I found this trade goes hand in hand with today's topic, and that is market structure. So now I'm gonna let this trade still cook up a little bit while I explain to you guys how I got here. Okay, now before you understand market structure, you need to understand how price moves. Price could either do one of three things: trend up, trend down, or consolidate. You're not really getting any higher or getting any lower. We're just staying in consolidation. Okay, so an uptrend consists of higher highs and higher lows. A downtrend consists of lower highs and lower low. If you do not know what lower highs, lower lows, higher lows, please get familiarized with the terminology. A higher high, this is a high, low, higher high. The reason why this is a higher high, because this high is higher than this high. This is a higher low. The reason why this is a higher low, because this low is higher than this low. This creates the traditional uptrend. You can draw a trend line to validate it on here, no different than here. But once we identify an uptrend that consists of higher highs and higher lows, we also want to be able to identify a downtrend, which consists of lower highs and lower lows. So once we understand how to identify an uptrend, identify a downtrend, we want to be able to identify consolidation, because this is in my strategy, we try to avoid consolidation. You can make money, and I have made money during consolidation, but I've definitely lost more money. So this is something that you want to be able to identify when to not trade. Everybody loves identifying when to trade and finding these perfect setups, but knowing when to not trade is just as important. So once we identify that we're not getting any higher or pushing any lower, we're just staying in consolidation, then it gives us a better option to get in or stay out of a trade. So once we identified an uptrend, downtrend, and consolidation, we want to be able to identify when price changes structure. So now this is structure here. Now how price changes structure is we go from a high, higher low, higher high, higher low, higher high, higher low, higher high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now what you're seeing here is an uptrend that switches to a downtrend. And I'm going to give you another example here of when a downtrend switches to an uptrend. This is considered a reversal, but being able to identify when price breaks the structure will give you the best possible opportunity to get in for a sell. Now, just looking at this here, an uptrend switch to a downtrend. Can you identify where price broke structure? And if you're watching this video and you're watching it for the first time and you're not too knowledgeable on it, I'll make it very easy for you. It is right here. But for the students who are new here and are still just watching to refresh their memory, this is where you want to pay very close attention to. And this is where I would mark it out, and not how I teach all my students to mark it out. You would mark this out as a BOS, which is considered a break of structure. And within every break of structure, we understand that a fair value gap order block or something is probably going to be here for us to reject off of, to be able to get into the trade that we're looking for, to look for a target about a 1 to 2. As you can see here. Perfect. And once you see this, and this is a break of structure, right? Because we broke the low. right? One more time. This is a break of structure because this is we did no longer made a higher high and higher low. Higher high, higher low, higher high, higher low, higher high, lower low. This needs to be a lower high for the trend to continue up. Since this was not a lower high and we broke the low and it made a lower low, this is no longer a valid uptrend. So now, once I identify that, I'm like, okay, we are no longer looking for buys. So all I am doing here, if it is not a liquidity sweep, is looking for a best opportunity to get in for a sell now. It wouldn't be right when we broke the low. You don't want to get caught in that. And that's when we're going to go over in our next couple of episodes when it comes down to our entry criteria. But just for this video alone, we're going to focus on structure. Now let's go over into this downtrend to the uptrend. Now lower high, lower low, lower high, lower low, lower high, lower low, higher low. Where will we draw the line? Right here. At the break of structure. Once you identify the break of structure, we're no longer looking for sells. If we were in any sells, once we broke structure, all we are looking for is an opportunity to find our entries for a buy side play, right? And it would probably come somewhere around here, an order block, fair value gap, something was probably going to be rejected off of. And it's just like butter, right? Now that we understand what a break of structure is, and we understand how it looks going from uptrend to downtrend and downtrend to uptrend, we're going to go right into these charts because these may be lines and it might be easy to see it here. And on the candlesticks, it looks a little harder. But if you're on TradingView, you can just go over to the candlestick and change this to lines. And now it's just the same thing that we're talking about here. We just use candlesticks because people like to use them, and it depends on who, how you view the market. But we're going to focus on being able to identify that on the charts. And now I'm going to show you here in this trade that I'm still in that is still cooking. Oh my God. It's still cooking. I do believe we're going to take out this buy side liquidity here. So I'm going to move my TP to the top here. And we're floating around 2,000, which is very, very nice. Now let me show you guys how I identified this break of structure and liquidity. These are the intermediate previous highs. So I would need this to be seen. And if we're really talking real sniper entry shit, let me scale in for y'all. Let me show y'all some real sauces on this 1 minute chart here. This right here, this whole area is super important. Now, people would see this and see people would see completely different things. But my brain is just filled on. Let me move my because if we come back to here, I want to get out. People will see this and see completely different things on this chart. But what I see here, right, besides a liquidity sweep, this low, we're getting to what liquidity is. And I already see us before we even get to this area, right? Before we even see anything to this right, I see we're in a clear downtrend. So I'm not really seeing anything for the buys now until I see some type of structure being broken, right? Me understanding that we're going off of previous highs. What I need to see broken to look for any buys is these previous intermediate highs, right? So me identifying that, all right, we're I'm not taking any sells. I'm kind of seeing where we're at depending on the time times price. You combine time and price together, gives you the best scenario. We're gonna go over that in the next couple episodes as well. But it being around 11:45 is going into lunch hour around 12. The reversal likes to happen, right? Me being aware of that because I've been trading for so long. I've been having many of days back testing these hours and realizing certain things. So once I identify we broke above here, I wrote a break of structure. And I still didn't even, as you can see here, I got in the trade up here. I got in the trade late. This was a late trade. I could have identified the trade a lot earlier, but I wanted to be very, very sure. But I wasn't trying to get a sniper entry. If I really wanted a sniper entry, this is where I would have taken an entry. But I took the safe entry because I wanted to be more conservative. I wanted to keep my win streak going. But let's cook up here. Let me show you something. After we identified this break of structure, because we closed above the high, the body, not this. See, look, this wick down doesn't count. This body here doesn't count. These two could have indicated that we're just sweeping liquidity and we probably could take the lows out. I need to see a solid body close above this for it to be considered a clear break of structure. Once this happened, right, in these candles here, we created fair value gap. We're going to get in what a fair value gap is. But me being aware that we already created a fair value gap that we had to trade back into before we continue to the upside gave me more confidence in it. But like I was saying, we closed above the high and we rejected the fair value gap. So we rejected the fair value gap. These two candles, I'm like, we still could be selling. I need to see something more. We came into the fair value area, rejected it, and then closed above. This very next candle, you could have entered, right? You could have entered once it rejected off this fair value gap again, or you could have just entered here. I usually like a 55 to 60 tick stop loss depending on how I'm sniping, right? So if we're going off that logic, 55 to 60 tick, right? Let's just take the 60 tick. And candle close right here. Me personally, I would have my stop loss below the fair value gap. So however that works out for you, however that works out for you. But say we get in on this candle. We got the closure above, and we're waiting for this candle. We come back here. We see the rejection. Oh, it looks good. Boom, we're going to get in. After we get in, we're looking for a 1 to 2, and I target to the highs on the left. This is a little too close, but I understand where liquidity is resting above the previous highs and previous lows. So my first take profit would be around this area here, depending on what we're going for. If I'm going for 1 to 2, my stop loss is below there. Then I could play it safe and target this intermediate high right here or that intermediate high there. As you can see, we kept going because on the 5-minute it was such a big shift, and we were kind of at the bottom of the range here that we had so much space to go up here. So once I identified the break of structure down here, for the rest of the couple hours, I was kind of just eyeing it and kind of babysitting it to see if structure was really going to, and that's TP smash, y'all. What the hell? That is over 400 ticks on NQ, right? Just nice little cook session. Being able and that was over $4,000-$5,000 made off of just the understanding of structure alone. I didn't do too much. I didn't use a million indicators, pure price action and structure and understanding, and a couple of fair value gap and understandings and order block understandings, right? But once I identified that, boom, 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 I would have gotten in here. If I really wanted to snipe, I would have got in here and I would have held. But since I didn't, it's all cool. We came back up here and I found my second entry was around this area here, because I identified we were kind of stagnant in this area. So I just kept pushing and I trusted that we were going to take out some of these liquidity points on the high side after we broke structure, and we didn't continue to go lower from here. Like we came to this area, to this high, which is this area of this bearish. This is like a bearish fair value gap area. So we definitely could have rejected off of this and got sent back down, but we did get sent down. But we only got sent down to about right here, which if you mark out this IF inverse order block, we came down to this inverse order block and kind of just rejected off of it and continued to the upside. So that gave me a lot of confidence that we were still strong on the buy side, especially on the higher time frames. If you look on the higher time frames, you don't want to just look at the one minute time frame, because you will get faked out a lot. So you want to use multi-time frame analysis to have the best chance and percentage on your trade, and that's what I did. So that's what allowed me to have the confidence to stay with the longs around like 12, 15ish, because I identified the break of structure here, even though I didn't get in. But yeah, this was a great trade today. I sent it to the Discord. Yeah, we was cooking. And yeah, and I'm about to post this on my channel. But I hope this helped you out today. This is all I got for y'all today. This is structure, uptrend, downtrend, consolidation, being able to identify from downtrend to uptrend and from uptrend to downtrend. There's other examples that I could use. Let me turn on my zones. Being able to identify what structure is in, like what we're in. Are we in a downtrend? What's the next draw on liquidity? All these things are going to help you have the best percentage in your trade. If this helps you out, make sure y'all leave a like, comment, and subscribe. It's KingJayFx, and I'll see you in the next one.